Hi guys, welcome to my channel. Today we're going to be reviewing the Terra project and the Luna coin that goes along with it. So if you look at this overview of the project, you'll see that it's a pretty healthy project, has some good governance, some good team members. It has unhealthy token economics for distribution, market cap. And, it has low Twitter followers, so its awareness is kind of low. All right, so first things first, my final conclusion with this project is I will not be investing in it. However, I do expect that there's a significant chance that it'll do very well. But the reason I am not going to invest with it is because the token model for this project looks very similar to an equity. And so that means I can evaluate it with P to E ratios and with its earnings and things like that. And I'll get into the math of that as to why we can actually derive its value from that. But the ultimate reason is, so it has 2 million users right now using its apps, and at my current justification for it, it would be needed to have 30 million users to justify its current market cap. So in order to see, the market is saying that we expect it to acquire 30 million people, and I actually agree with that, but it's already priced in. So regarding the other component of this, which does not contribute to the fees and does not contribute to the token evaluation, but does contribute to users onboarding, is that they'll do crypto savings and incentivization for onboarding people using, staking, proof of stake coins in their wallets and things like that. That doesn't contribute to the validator fees, but that does contribute to onboarding. So that might be a way for them to reach this 30 million target. But once again, the reason I am not going to go with it is because it would need to onboard 30 million just to justify its current price. All right, so the summary of the project is that they want to solve the network effect of stable coins. Basically, they want maximize adoption for usefulness, get cryptocurrency to spread. So that's what their current market is. And the Chai app is where they have those 2 million users with about 50K users. That's 2.5% daily engagement of those 2 million users. So that's their current market, their current niche that they're serving. What problem will they solve in the future? Well, basically just growing that number. They have the Anchor Wallet partnership that they have done recently, so that should grow their amount of users that they will have. They're going to do Polkadot integration. That's awesome. So that maybe there's some future markets for that. Expanding their user base. And yes, there's a very large market for a stablecoin. Merchant partnerships, basically they're going after merchants and sales and stable coins and just, using it like a payment, like Venmo. But a cryptocurrency working in the background, which is the Terra coin, would be doing all of that. And the fees from that would go to the Luna token, which is what we're talking about here, is the Luna token. So does the team have a track record for showing that they can deliver? Yes, they do. And is a token tied to services and the success of their services? It is. And do they have room for growth? Yes, they do. All right, so we're going to start from the top up. I do expect the price to perform, but I don't expect it to be like... I am after astronomical growth because that's what I am biased towards in crypto. And I don't think they're going to do that, but I do think that I think that's possible with them. But it's more difficult for them to have astronomical growth than it is for many other projects. And so, that's why I will not be investing with them. Their current niche, I do expect their niche to grow. It's stable coin purchasing, like Venmo, and, saving proof of stake other coins. This is for onboarding. Once again, this is for their target market, which is just using it for, purchases. Token is used. So the token is, we'll get into the notes of those numbers, but the model that this token uses is very much like an equity. You stake the tokens. The more stake you get, the higher validation and voting power you get, just like a company, just like equities. Your equity share is, usually a vote for the future decisions of the company. Same thing with this. And the higher stake you get, the higher amount of stake you put up, the higher amount of transaction fees allotted to you. So once again, like dividends, so it looks very much like equity in its structure. And so the amount of quote dividend that you get is based on how many transactions this will see, and so every evaluation is based on transactions. Once again, I'll get to the math. I don't know how many times I said that already. All right, value of target market is large. Yes, it is. Room for growth. All right, we're going to start getting some momentum. Let's get some yellow here. So future market excitement. It's already seen some pumps. Current awareness. It's all over the exchanges. It's easy to acquire, so that's not good. That means there's already been, there's no pump from that. Potentially, it's not very difficult to get. All those retail investors have already bought it. Yeah. First marketing campaign, they've been marketing. I saw them on MSNBC and things like that. So that, their awareness is not rare. They've been around the crypto community. They've had plenty of promotional videos. However, I will say this is a good thing. They only have, their team has a low amount of followers. Their Twitter project has 11,000 followers. Their highest YouTube exposure is about 10K that I could find. So all of those are pretty low. That's pretty good. So maybe I'm wrong about this. Even so, given that evaluation and how it does, you can calculate the PE. There's just a lot of good projects in crypto. That's the only reason I wouldn't invest. Otherwise, this is a good company to invest in, for growth. I do think that they could have that growth in the future. Money needed to move prices, decreasing. Yes, I do. Tokens on the sell side to decrease. It's in between. It's up 153% in 3 months. That's pretty aggressive. Here's the bad things. This has a very large market cap of 250 million. Token supply distribution is not good. They've only released like 43% of the tokens at the token sale. It's probably more than that by now, but low inflation rate. 6%. The validators are acquiring about 6% now. It's equalizing around that. Obviously, if people put more into stake, then that number would drop because there's only a constant amount of value that's being acquired from the transaction fees. So they're reaching like a market area of 6%. And you know what? That's normal. Like the normal market rate for things is usually around 6%. Plus inflation, that's normal. The reason you see ridiculously low inflation rates now, interest rates now for your savings and stuff like that is because it's artificially held down by the Federal Reserve. But it's just reaching that normal number. And so then, if that number was to drop, then the number of validators would decrease, meaning if their fees would go down, there'd be less people staking towards validation. But if the fees went up and you were seeing this 6% grow, more people would contribute, and that would contribute to price. So the amount of transaction fees. But I will say, we'll see. We'll show you some stuff. All right. 8 million users using the CHI app. And so that's once again back to their current niche, which is good, and I can definitely see that growing in the future. Tokens per person to go down. Yes. Fees that burn tokens. So there's yes and no on this. They do burn tokens, but they also generate tokens, so it holds the price constant. But they did say over time they will have a slow contribution from fee burning. So that's good, but it says they said slow. And they also said, it's just to reward people in the long run for sticking with the program. So that is good. So that's why I put it as green. 4 stars on the Chai app for how easy it is to use. So it is easy to use for people. They like it. I looked at the reviews. People did like the app. All right, we'll get into protection from, we'll get into some governance stuff. So it has 21 days unbonding period, so that prevents exchanges from using other people's tokens voting, because if they vote for something, but if there's a big withdrawal from exchanges would be scared because it takes 21 days for this to unstake. So I think that's a good enough protection from exchanges voting with user funds. And there's evidence that exchanges are not doing that in huge numbers. So that means that ultimately the voters who bought in are representing the token holders, which is what you want. So the governance is, it's just like an equity model, like I said before. The Luna is a mining power. It's voter weight and allows for the allocation of fees from proof-of-stake mining. So vote controls the treasury, vote controls everything, the future of this project. So that's what you want to see. The amount of Luna attached to staking, it's around that 6%, which is a 15 P to E ratio return. So that means it attracts the amount of stake towards validators that produces, around that 15 number, which is the natural number for stocks and equities and everything else. And so we're reaching that 15, as far as earnings, 6% of the token. And, the amount that people will put into validation is directly tied to those fees. High value people, prioritize upgrades. Yes, I do expect that to be the case. Yeah, I expect all this stuff to grow, future marketing, future efforts. This one is on the fence, like as far as if I think it's going to be super bullish. I do think this project has potential to be very bullish. But I don't know. It's just not me. It's just not my interest. 50 million. This guy is Daniel Shin. He's the CEO of Token Monster. It had 3.5 billion gross merchandise value, or raised $500 million raised. So he's got quite a skill set. And these other guys, Rachel Abral, user growth. He oversaw the Uber growth in India tenfold, and Do Kwon. He's messed with mesh networks and software and stuff like that with Microsoft. So yeah, they're a talented team. Current developer team's good. Partnerships are Anchor and Chai. Anchor is the one that's up and coming. That should on-ramp a little more people in the West. They have a lot of competition in the crypto space. Like, for instance, the ones we've already gone over. Vigor. One we didn't go over was the DAI stablecoin. What is it called? MakerDAO and Celsius. Celsius, taking away from their staking, onboarding users for that. So, there's stiff competition. So I put yellow for that. Celsius is a monster. I think Celsius is going to perform very well. So I wouldn't try to compete with them. Long-term vision and strategy. Yes. Developer compensation. Yes, they have a treasury that's voted on by the token users, so they will compensate developers. So I do expect services to get better over time. Long-term vision and strategy contributing to high-value upgrades. I do expect that to happen. Because the governance is well on this. So I expect, all of those governance-related things and people involved to be good. And so I do expect the upgrades to improve and all of that stuff. So clear mission. I don't like their mission statement. It's powering the innovation of money, but that does leave them open for new ideas, and they might get creative with this thing. So it diverges away a little bit from their main goal, which I've seen them talking about, which is as a payment provider of cryptos, getting that mass market of users. But that might be a good thing or it might be a bad thing. It depends. All of this is just stuff that doesn't contribute, so it's not relevant. All right, so I do expect them to capture some business purchasing of the tokens, just because it's like a regular equity. Like the way this thing is priced, it looks very much like it. Yeah, so the business is to be good. All right, that's an overview. So that this is the health of the project so far. I will get into the math now. If you're not interested, you can check on out. But here we go. All right, so they have current users of 2 million users and 50K active users. So in a worst case and best case scenario, we're going to look at the different numbers. So with 50K users at spending about $20 a day, this number is important for our calculation. And their fees they said the fees go to 0.1%. That's the average transaction fees that they get for that's the average one. So that would equal $1,000 a day that is income for the validators, or $365,000 a year, making the eval of this current company, which is 250 million, 684 PDE. And so the 34x when divided by a 20 PDE. 20 PDE is 20, 15 is better, but 20 is about, these are about average PDE ratios. So I just use the high end number, and we get 34 times in the worst case scenario, meaning they would have to on-ramp about 68 million users to justify their current market cap. So that in a worst case scenario, they're significantly overvalued. In their best case scenario, once again, 50,000 users, but this time they're using $200 a day. I don't expect people to be spending $20 a day, but 200, that might be a little high too. But I don't know. Like my girlfriend said that she spends about 100. It depends. Like Venmo users probably spend about 100, maybe $80. That's probably closer to being right. So about half this number, But this is the best case scenario. So let's say 200 at 1% fees, which is the cap for the fees on this. And, that would be everyone at 1% fee, which, that's obviously overstated, would be 10,000 revenues a day, or 3.65 million a year, making the value of this $250 million company at 68.4 PDE, which is 3.4 times divided by that 20 PDE. So that's 60. They would need, with this best case scenario, they would need to on-ramp 6.8 users. And I could totally see that happening. But once again, that's overly optimistic. So my guess is that to value this right is about 25 million users. So if you look, 250 million. So what I'm saying is just multiply it by 10, and that gets you roughly the amount that I expect that this market cap should be. So if it had a 1 billion, they should have about 100 million users. And so could they get 100 million users? Absolutely. They're in Korea, they're globally. So I can see them getting around those kind of growth numbers. So facts to consider. Number of users that download the Terra apps, percent engagement, which is that ratio of people involved. So they have 2 million users and their engagement is 2.5% engagement. So if that was to grow, if they had some mechanism to get that to grow, then they wouldn't have to onboard as many people. So that could be critical as well. Or the amount that people spend. Like Venmo, like if they had people spending more through the app, like paying their rent. If they had rent going through this thing, this thing could explode if they had renters paying through it, because then it wouldn't be that $200, for that 2%, or that $100, for that 2.5%. It'd be like, oh, I'm paying rent, I'm paying $1,200, $1,500, that's what you would be paying. And if you have those transaction fees that, so if they had something like that, like a deal like that, oh my gosh, this thing would be amazing. If that was their proposition. So once again, you could see how this could be explosive. So yeah, my take is it would take, about 25 million people to justify its current PDEs. So about 1/10 the market cap is how many people they need. And this is just their token supply stabilization mechanism. As new people on board, the fees do drop. So if the number of transactions go up, the fees drop, and the burn rate drops to stabilize the supply of Luna. And if the number of people onboarded drops, or the number of transactions drops, the fees would raise, and the burn rate would raise. And it's to keep it constant, to stabilize the incentives for the validators. If it was me, I would try to just keep the burn rate going, because that's just me. I love like burning tokens. It'll make things more valuable. But that's what they decided to do to stabilize, to stabilize the mechanism. And that's also why I like the token burn is not as contributing as I said, because they slow down the burn, or they even generate new tokens when people acquire their stablecoin. And yes, this is also related to their stablecoin mechanism, but I don't really need to get into that for the token evaluation. All right, guys, that's an overview of this project.